We are live. Happy Wednesday evening. Happy June. The May numbers for the Vancouver real estate market are out. And interesting enough, sales are down 20% year over year and actually down 20% over the last 10-year seasonal average for May, which is pretty crazy. And the interesting part is prices still continue to rise. So we're going to dive into this. We're going to talk about what this means, how it's going to impact your moves here in the Greater Vancouver area. So if this is your first time to the channel and you want to know everything there is about real estate in Vancouver, subscribe below, tap the bell for notifications to be the first to learn what's going on in the current market here in Vancouver. My name is Megan Becker, and this is James Knull, CEO of Mogul Realty Group. And our team gets calls every single day from people looking to make moves within the Greater Vancouver area. So whether you're moving in 9 days or 90 days, all my info is in the description box below. So please reach out. And we are live. So if you are joining us, please put your questions in the comments. And we're going to dive into some relevant topics here. We're going to get into the numbers, and we're going to share some opportunities that we see specifically right in the market right now. So James, you want to do a quick intro here for yourself?
Hey, Megan, I am super excited to be talking about the market. It's a very interesting time because some of the ways that the market is behaving, some would say it's counterintuitive. So we're going to dive into how those economic drivers are impacting what actions make sense in the Vancouver market as we round spring into the summer market. I'm James, CEO of Mogul Realty Group. We've been in business 20 years. We do business all over Western Canada. We love the Vancouver market, and we help people find their best home on a monthly basis. And we're excited to talk to each and every one of you about what's out there in the market today.
Absolutely. All right, so I think this is what's been on everybody's mind over the last week here. So interest rates were cut last week, so we went down 0.25%. So what's your take on this, James? There's a lot that we can dive into here.
Well, the reason that interest rates rise and fall is the government, the Bank of Canada's attempt to help regulate the market. So we know that interest rates were going up because of the inflation that we were seeing in the Canadian real estate market. Now that the Canadian real estate market is a little bit stalled, well, inflation has been stalled, which is great. So it's about time to start cutting interest rates. The interesting thing about the Canadian real estate market is that it's really dictated by Ontario, specifically Toronto first, and then Vancouver as the episode of BC second, and then everything else. So we're actually still seeing a lot of inflation in the prairie provinces, even though the main economic drivers are stalled. Now, the interesting thing is that Ontario's market is quite stalled right now. Vancouver's has hit a balancing point. So we are seeing what we would describe as a balanced market. Now, this is good news for people who are looking for the market activity to resume, because the decrease in interest rate should stimulate the Vancouver market faster than it stimulates the Ontario market.
Yeah, I think it's going to be an interesting summer here, as there was a stat our mortgage broker shared. He said about 70% of first-time buyers right now are waiting for rates to drop. And I think it's kind of a culmination of a lot of people sitting on the sidelines as far as buyers wanting to see some type of rate drop. And then it's sellers also sitting on the sidelines, figuring out when is the right time to buy, when's the right time to actually make a move. Because here in the Greater Vancouver area, there was a stat, it was about 50% of homes don't have mortgages. And so for these sellers, it needs to be that right time for them to justify making that move, right?
Of course. And the interesting thing about that 70% is that often consumer behavior behaves in a way that doesn't actually align with good economic sense. The most common phrase we hear about any market, stock market, real estate market, is that you want to buy low and sell high. When other people are not taking action, that's the best time to take action. So what we've seen is the Vancouver market shift towards what we call a buyer's market. That means that there's less buyers making buying decisions. There's fewer people taking action, and the signs are there. Instead of frenzies, bidding wars, unconditional offers, people lined up out the door to access open houses, which is what we saw when it was a seller's market. What we're now seeing is buyers having the opportunity to slow it down, do a bit of shopping, look at their options. We submit offers for our clients frequently that are below list price. Well, hey, that is exactly what you want to see in a market. When the interest rates start to drop, that is going to stimulate the market and move the scale back to a seller's market. So even though people are scared to take action when the market is quote unquote cool, the age-old wisdom of any buying decision is that you want to buy when things are low. And that's where we're at right now. So this initial interest rate cut, we are going to see people saying, I just want to see a few more cuts to wait to see if the market is going to get hotter. Well, we know what the trend is. You know, it's funny, when we saw the first couple of interest rate increases, everybody knew that the interest rate increases were going to keep coming and it was going to slow the market down. But now people are scared to act when we see the exact same trend starting to present itself in the opposite direction. So that's 70% that's waiting on the sidelines. Well, people that make smart buying decisions, they might jump in right away. And that's the first 10% of that 70. And then maybe the next 10% will jump in on the second interest rate cut. And then the next 10% will jump in on the third interest rate cut. But at that point, the market has been stimulated. Prices are going to start moving. So for people that are paying attention here, really, you want to pay attention to the fact that you don't want to be part of the stampede when that consumer confidence returns to the marketplace. You know, I think about it kind of like the dance floor at a wedding. It pays to be that first person on the dance floor. It really doesn't pay to be part of the stampede, because that stampede, they're all competing with each other for space on the dance floor. Right now, you've got a really wide open opportunity to make some buying decisions. So that's going to be a conversation that we really want to talk about, because why are people waiting? Well, there's an impression out there that, hey, you know what? If I wait for interest rates to go down, my payments are going to go down. And I want to maybe talk with you, Megan, about the math of how big of a difference 0.25% actually makes. Because when we think about how interest rates affect your payments, well, if you add up that payment over, say, a 5-year term, which is 60 months, versus how much prices are going to shift upwards, the equity in the price, the growth in the market, represents way more value, way more equity, way more money assigned to you as a person, your name, your net worth, than the savings that you make on a lower interest rate.
Yeah, exactly. I find people are looking at kind of one small thing being the interest rates versus opening up their eyes to the entire context. And that's where it comes. And I educate all of my clients and people that are considering getting into the market that it pays to work with a realtor that understands your motivations, that understands why are you even wanting to purchase. Because I tell clients, like, my number one goal is not to like sell you a property in and of itself, is I want to understand what your goals are so that I can guide you. Because if you're clear on why you're doing something, and if you have the right team behind you, the right realtor, the right mortgage broker that understands how to structure your financing and your investment, whatever that looks like, you are naturally going to feel more confident getting into the marketplace when maybe not everybody is doing that. But I think the reason why so many people wait is because that's what everybody else is doing. So that's what's quote unquote comfortable, because they don't have the right team behind them. And we actually were on a call earlier this week with our mortgage broker, and he broke down. He's got a spreadsheet. If you reach out to me, I'm happy to share that with you. That will compare. Okay, we purchase property A at this price and this interest rate versus we wait, maybe rates go down slightly, but we just talked about property prices go up. What are we actually looking at there? And we ran some quick numbers, and you're actually saving money by purchasing now at a slightly higher rate.
Well, I want to build on that too, because the difference in payment for even an entire 1% isn't as significant as you would think. So whether your budget's $500,000, $1 million, $2 million, take the time to crunch the numbers on what the actual interest savings are for that difference in purchase price. It's not as much as you think when you compare it to what you'd be losing out on in terms of paying a higher price for that same property you could be paying less for right now. Here's what I think some people are thinking is they're listening to us and they're saying, yeah, but you know what? There's a sweet spot there. The interest rates are going to go down to this perfect place. So I'll have a slightly lower payment. And that's exactly what I'm going to buy before prices start going up. And here's the thing for those of you that are buying, but you're not buying a TV. You're not buying a stock. You're not buying a car. You don't just go and buy the darn thing in one day. Real estate purchases take time. There is a time frame at which properties that match your criteria come on the market. There's a time frame in which you go out and physically view those properties. There's a time frame to write, submit, negotiate an offer. There's a time frame to finalize that offer. And that time frame at the very least takes a few weeks, but sometimes could take months. So if you think you're going to try to be a genius and find that sweet spot between where the interest rates have gotten to a low point before the market has started taking off, if you start shopping at that point, you're already too late. And by the time you get your shopping going, you're going to be part of that heated market, and you're already going to be chasing the market up as prices go up naturally because of bidding wars. So even though you might not see the listing prices start to shift, the way the Vancouver market operates is that the purchase prices will start to shift, because that $500,000 property that would have been you as the only buyer, so you can offer a below list price offer, will all of a sudden be 5 buyers, 6 buyers, 8 buyers, 10 buyers, all offering higher than 500,000. So you're going to see purchase prices start to move before you start to see list prices. So again, by the time you start to see listing prices start to shift, you're already a couple of months too late.
Yeah.
And that's the big risk. You think you're risking overpaying on your interest rate, but as a buyer, what you really are risking is being too late to the market. And then instead of buying when there's a buying opportunity, now you're buying into a hot market.
Yeah, very, very good points there. And I do want to touch on something because that we're speaking with the assumption that people want to get into the market. They're just unsure of when and how to do that. Our number one goal is education. And one of the comments, a couple people made the comment on the last video that we did, and you hear this all the time. And I know, James, you've heard this, is like, oh, realtors always say it's a good time to buy. It's a realtor's job to sell houses, and absolutely, it's our job to sell homes. But I want to unpack that comment because we get it quite often. And I think if people don't understand the context of what we're talking about, it's like, oh, this is new. A realtor just saying, it's a great time to buy. What else is new? Switch to the next topic. But let's unpack that a little bit, James. Tell me your thoughts.
Absolutely. I mean, it's the truth of the matter is some realtors will always say it's a great time to buy. And some realtors will always say it's a great time to sell because they just want to generate business. I'm telling you right now, if you are in Vancouver, it's not a great time to sell. It's a good time to buy. And if you had asked me that exact same question 16 months ago, when it was all lineups, all bidding wars, all heat, all the time, I would have said, hey, if you've got a house you want to sell, it's a great time to sell it. And I would have also said, hey, you know what? Unless you absolutely need to move, it's not a fun time to buy. I would wait for the market to cool back off. And here we are in that cooled off market. So, don't take my word for it. Don't even take any other realtors for it. Just look at what type of market it is. There is a very clearly defined way of understanding whether it's a buyer's market, balanced market, seller's market. It's defined by the absorption rate in the marketplace at that given time. If the absorption rate is 1 to 3 months, seller's market. If it's 3 to 6 months, it's balanced market. If it's 6 months plus, it's a buyer's market. So all you have to do is look at the absorption rate and you know which market it is. So the name of that market describes who you should be in that market. By definition, right now in Vancouver, we're in a buyer's market. So don't take a realtor's word for it. Just go with the definition that is defined by some pretty easy to understand metrics. Let me give another example. We have an office in Edmonton, Alberta. It is a full-on needle to this side of the meter seller's market in Edmonton. So if somebody's listening and thinking about Edmonton, again, people just like to follow that herd mentality. We're seeing investors from all over the country just scrambling to get in on Edmonton because it's a hot market. Again, you are doing the opposite of the general, well understood economic advice that we talked about at the beginning of this conversation. You're buying high. You're buying high in Edmonton right now, yet people are scrambling to Edmonton to buy and leery about Vancouver. In Vancouver, you're buying low. So don't be the person that follows the herd and gets excited about buying in a hot market, sell in a hot market, buy in a cool market. That is the core fundamental definition of buy low, sell high. So if we're going to circle back in Vancouver, that 70% that's waiting, don't drag your feet too long, because the Vancouver market is not one to stay down for long. And if you wait until the market gets hot and then you start buying into a seller's market, well, think back to this conversation and say, oh gosh, I am not following the age-old wisdom of buy low, sell high right now.
And I think real estate, it's a long game. It's not, that saying, you don't day trade real estate. If you look at all of the numbers, we'll dive into them here right away. If you look at the numbers for the greater Vancouver area, look at the 10-year, everything has gone up significantly. And I think that's where we need to focus our efforts on, because, if you take a snapshot and you condense it down to maybe a 2-year period, you might see blips. But you expand that over to a 10, 20-year, that's where, your gains in real estate is going to be. So anything else you want to add on that before we get into the numbers?
I think let's get into the numbers, Megan. I think we really helped people understand and make sense of what the market actually looks like right now. The people that we're really speaking to are the ones that are in that wait and see mode. Like, we've seen our first sign. If you're thinking about mobilizing sometime in the next 6 months, it's much more in your financial best interests to be early to that dance floor than to be way too late. And by the time you see list prices start to move, you are for sure, unequivocally, without a doubt, too late.
Absolutely. Okay, so let's get into, sales this is for the month of May. Sales were at 2733. So this is down 4% month over month. And like I mentioned at the beginning, down 20% year over year. Listings are up significantly. So 13,600 listings currently on the market right now. This is up 8% month over month and up 46% year over year. If we look at benchmark sale price, so all residential across the greater Vancouver area, we're sitting at 1.2 million. And this is up 1% month over month, up 2% year over year. Looking at detached single family properties, we're sitting at 2,062,600, up 1% month over month, up 6% year over year. Attached properties are sitting at 1.145 million, up 1% month over month and 5%, up 5% year over year. And then attached properties are sitting at 776,200. And this is actually down slightly, 0.3% month over month and up 2% year over year. So kind of interesting. Any thoughts on those numbers specifically? I know we're going to dive into some specific opportunities we see here.
Yeah, we're talking about the math of how to figure out what kind of market it is, and we're seeing almost 14,000 listings and just over 2,000 sales. So if we do the simple math of 14,000-ish listings divided by just over 2,000 sales, that's 6 to 7 months of inventory. That's our absorption rate. That's our key indicator that it is a buyer's market. So the math speaks for itself, folks. And thanks for backing up what we're talking about with the data to prove it, Megan.
Yeah. I think diving into some specific areas, so you might be thinking maybe you're an investor, you want to look for certain areas, you're looking for opportunities here. So a couple of specific ones that really stick out for me, and I've got some clients in these specific areas. So where are we looking that we're seeing the largest decrease in sale price? So single family homes, specifically, was Squamish. So benchmark sale price for a single family home in Squamish is actually 1.5 million, 1.535 million. And this is down almost 5% year over year. And I know you might be thinking, Squamish, that's quite a commute. if you actually look at it on a map, calculate out your commute times, depending on where you're commuting, it might actually be realistic. I have a client I sold a condo to in Squamish at the beginning of the year. He commutes twice a week to West Vancouver. And he's like, I'd rather live in Squamish than any other area based on affordability. That's where he looked at. Like, the commute from Squamish to Vancouver versus Langley to Vancouver. I mean, I'd choose Squamish every day. The next one was apartments in North Burnaby, which I think this is specifically in that Brentwood area. So benchmark sale price is $759,400, and this is down almost 1% year over year. And I've have a few clients looking in this area. There are a lot of recently completed pre-sale projects that are sitting vacant, that are currently on the market right now. And then looking at downtown apartments are pretty flat year over year. And I've got clients looking in this area, and we just looked at a property, shows really, really well. And it had been on the market for about 50 days. And we took a look at it, and within, I think, 2 days of us seeing it, they reduced the price $40,000. And exactly like James mentioned earlier, if you're buying right now and you were nervous about maybe the 2 or 3 years ago of the bidding wars and, make all these decisions really fast, now's your time. You've got the luxury of seeing a property, thinking about it, chatting about it, making sure all the financing is there, having your subject period, doing your due diligence, and not being rushed and not being, elbow to elbow with people at open houses. So those are the biggest opportunities that we're seeing right now. So before we wrap up, we just had a comment here. There's Christian and Nash, a realtor from the Greater Toronto area, just made the comment here. He says, "Who needs lower mortgage rates? About 1% people. Who needs lower home prices? 99% of people." What's your thoughts on that, James?
Well put.
Yeah.
Put. I mean, if a home price being $50,000 less expensive is going to make a bigger impact on your net worth than a 1% interest rate on that exact property. So very, very well said. Thank you to our Toronto colleagues for chiming in on that. And we wish you the best, because these interest rates need to stimulate the economy out there in Toronto. So all the best to you guys. And we're excited to watch the Ontario market grow.
Absolutely. So thanks so much for tuning in. And as always, reach out in the meantime if you have any questions about the Vancouver real estate market. If you want to connect, I love it chatting about real estate and helping you find the right property. And if you enjoyed this market update, make sure you hit that like video so we can continue to produce more great content like this. And YouTube just feeds it to everybody else. And in the meantime, we'll chat with you guys all next month when the June numbers come out. Have a good night.
Thanks, everybody.